Welcome to another episode of Simply Bitcoin IRL. Very special show for you guys lined up today. We have Nick Hansen. He is the CEO and co-founder of Luxor mining pool. I've been around really since the inception, so I am really curious to dive into the whole story. Right now, last time I checked, Luxor represents about 6 to 7% of the Bitcoin hash rate. So it is a significant pool. I got a lot of questions for him. Before we start the show, I want to give a shout out to the awesome Bitcoin company that powers Simply Bitcoin IRL, Swan Bitcoin. Best place to buy Bitcoin, buy Bitcoiners for Bitcoiners. You can stack anywhere from $10 to $10 million. They incentivize dollar cost averaging. They also incentivize self-custody. If you haven't already done so, go check out swanbitcoin.com today. That being said, I want to bring up my guests. How you doing, Nick? Welcome to the show.
Hey, how's it going? Good to see you again. Last time I saw you was, I believe, in LA. Safe to say he is just as attractive in person as he is on screen. So good to see you again, Nico.
Oh man, you're very kind, but I'm overweight now these days, so it's very nice for you to say that.
Well, it's bear market time, so it's time to get lean. This is the time to cut.
Anyways, Nick, we got into such a fascinating conversation it was one of the side events. It was Mark Moss's event. And we got into such a fascinating conversation that right then and there, I'm like, hey man, come on the show so we can dive into these things. You did mention that all the topics that I wrote out on the Twitter promo, it's going to take about 6 hours to cover. So I have good news for everybody. It's going to be a 6 hour straight. We're not going to get up. We're not going to do anything. We're just going to cover all of that stuff. No, I'm just kidding. No, but this is great. So I could have Nick back on the show. So I want to start off with this, man, because I think it's fascinating. How do you go about starting a Bitcoin mining pool, right? And you guys have achieved a tremendous amount of success. I know a lot of you guys personally, Ethan, Guzman. I love Guzman. So I've known you guys. You guys are around my same age. And what does it take? Like, why? How did you even come up with the idea to start a Bitcoin mining pool that today represents around 6 to 7% of the Bitcoin hash rate?
Yeah. So starting a Bitcoin mining pool has an incredibly high barrier to entry. And then once you've entered that space, your customers are not sticky at all. The cost of switching mining pools is effectively zero. So it is a terrible business to be in. I would highly recommend not doing it if you were. There's a lot of reasons why you would, though. So the way that we got into it, and so we actually got into it we started building a mining pool in 2017 for a coin that wasn't even Bitcoin. Mostly because the barriers to entry for that were much lower, right? So we started building for a coin that has a market cap 1/100th of Bitcoin, which allowed us to make a lot of mistakes that you make early on in building a mining pool, like messing up block construction or producing a ton of stales or just all sorts of different things that you can do when you're initially starting out building a mining pool. So then from there, we were able to transition into Bitcoin denominated payouts, and then also finally harnessing some Bitcoin hash rate and trying to mine Bitcoin blocks. And so over time, we just grew this expertise, and we're really just tenacious. It's really a testament to the Luxor and the Luxor team, the ethos of Luxor to have gotten to where we are today. And it's really just through proof of work, physical proof of work, as well as the digital proof of work that we're accustomed to. And then also just being extremely tenacious and being able to survive and continue to push through these different these markets, and then also through all of the things that come along with running a mining pool.
So let's talk about that, right? You talk about tenacity. I completely agree. Like we're Simply as a media company, but dude, every day it's battle, bro. Like literally, that's what it feels like. So, but I'm sure that from the mining pool perspective, you mean survival. What does that entail? What does it entail to survive as a Bitcoin mining pool?
Yeah. So, well, to survive, you have to first actually come to life. You actually have to live. And so just getting to the point of being, a pool that mined a block, once a day was that required incredible perseverance. It's very difficult to get miners to switch their pool. Because once they become accustomed to a pool and it pays them out, more or less what they're supposed to get paid, there's really no reason to switch. So what we had to do was figure out, well, what are some of the features that we can add that bring customers to Luxor? So we do focus on product-led growth, meaning we go and try to build a product that will drive customer adoption, as opposed to going and acquiring customers, by other means, whether that's through different pricing or whatever. Foundry, on the other hand, would be more of a pricing-led product, right? Where they price their product super low and everybody uses it. We're more of a product-led growth company, so we try to build a superior product by adding features that customers want. Good example would be something like we have something called the operator dashboard. So that we built that specifically for all of our hosting partners. Compute North was one of them. Actually, they were very interested in this back when Compute North was a thing. And one of the driving factors in building that feature was giving hosts the ability to see the customer data, but also leaving that the sovereignty of that data up to the customer. So the customer at any point could decide they want to pull access to that host, and it was a really nice way for us to effectively build a product specifically for the folks that are going to be hosting the mining machines, make it easier for them to service their customers and that sort of thing. So we do build all of our products. We built the Luxor brand. We built the market share that Luxor has through building what we think are superior products. And so that's really how we got to where we are today.
So how has this bear market been for you? It's been brutal for miners. But from the mining pool perspective, does it really make it? And the reason I say this, Nick, is because until not too long ago, the hash rate continues to go parabolic. It's interesting because it's really doing the same thing that it did in 2017, 2018, where the hash rate kept going up for about a year, even after the blow off top. So, and it looks like it's this bad boy continues to go parabolic. If you're looking at Bitcoin's fundamentals, it's absolutely amazing. But from the Bitcoin mining pool perspective, has it hurt you guys? This market downturn, all the frauds that are blowing up, whether that's Celsius, FTX, etc.
Absolutely. I mean, it would be a lie to say that it didn't. For multiple reasons. We produce more Bitcoin than we've ever produced in our short lifespan here as a Bitcoin company. But unfortunately, that Bitcoin now is only worth $17,000, where it used to be worth $68,000 or $69,000. So on a dollar basis, it's certainly not as good as it was last year. Compound that with the frauds and the things that are going on in our space, our industry. The world looking in, whether we say Bitcoin or crypto, the world calls it crypto. All of that money is now sidelined, waiting to see kind of what happens in this space. So that's going to make it really tough for Bitcoin companies to go out and raise capital and go, get the funding that they need to continue to grow and foster this ecosystem. And a lot of that capital dried up with FTX. I mean, that was sort of the VC darling. So I think that that's been what I've seen from the fallout here, and I think that that's going to continue. Somebody's asking to see a block clock. I don't have a block clock, but I have an LED block clock. You can see it back there. That was actually made for me by somebody. So there are none of that's 3D printed. There are actually none of those in the world. Very nice, very nice. There you go. See that ASIC, yes, that ASIC is warming up the room. It's about 72 in here. That's an S9 running LuxOS firmware at about 275 clock speed.
Did you just say LuxOS firmware?
Yeah, LuxOS
not using
firmware.
brains.
Yeah.
You guys are making firmware now.
Yeah. Can I screen share?
Absolutely.
Let's see if I can pull this up. Yeah, latest build from this morning. Okay,
let's check it out.
There you go.
Very nice. So, you guys have come so far. Oh my God.
Still a little bit of an alpha version, but we're getting there. It looks like I So I've been tuning this device because I want to maximize the temperature and minimize the fan speed. That's the heater profile, I call it, because it's, if you turn on the fan, it's like super loud. But anyway, so it looks like I went a little too hard on one of these hash boards, and it died. But anyway, a little bit of pre-release alpha coming for you here. Pool config, got hash rate splitting, which I know a lot of people like. Yeah, so this is coming down the line. Obviously, efficiency is terrible because it's an S9, but we're working on it.
Dude.
So
very, very nice, man. Well, good for
you
you
go.
guys, dude. Holy crap, you guys have come so far. I remember when you guys launched. I was there. I remember that. It's been
I know you. Do you want to tell the? I know you've told the story a couple times. Maybe tell it again. Do you want to tell the story of kind of how you encountered, like, I guess, Eddie and I believe you were mining at our very first mining pool.
Yeah, dude. I so long time ago, man. I would always I've always been a Bitcoin miner, but at that moment there was times where I was a bit of a shitcoin miner. This was 2017, 2018, and you guys had the only, I think what was the name of the shitcoin? It was like Saya Stat.
Was it Siacoin?
It was like Saya, and that's how I ran into you guys. And you guys just stuck around, and then I was very pleasantly surprised when you guys basically announced that you were going into Bitcoin. But I had that feeling because again, I don't understand things on a technical level very well, but I understand things conceptually, and it's incredibly difficult to, like, because I was looking at it from the miner's perspective, right? The miner's perspective, if you're a Bitcoin miner, what you want is steady payouts, specifically if your overhead is very expensive. So if you have to pay bills, you want consistency in payouts, right? And if you're a mining pool that doesn't have a lot of hash rate, like, you're not going to be able to offer that consistency, right? So dude, I remember, man, it was 2017, 2018. It was back in the day, dude. Things have changed definitely. But yeah, man, it was very interesting times. Nick, so let's talk about, and this is the conversation we were talking about in LA, right? A lot of moves, and again, like, this is the, we always say this we start our show with this, right? This is the separation of money and state. I think that's absolutely what we're living through nowadays, and you're seeing the state fight back, right? Specifically in the case of the United States, it's really the Office of Foreign Asset Control that's really being the most hostile. We know from Marathon, for example, they released, quote, OFAC compliant blocks, right? And that was a big deal. And for anyone who doesn't know, and we're going to get to Stratum V2 and how it changes that, but it's the miner that gets to pick what transactions are included in the Bitcoin block. And
mining pool specifically.
Mining pool, correct. Mining pool gets to choose what Bitcoin transactions are included in the block, right? And that definitely creates a centralized point where governments could potentially, I wouldn't say force, but put pressure, to put it gently, right? So I know that Stratum V2 changes this dynamic because it's going to give the capability to individual miners to pick what block, like what transactions are included in the block. But I'm sure this is something that you think about all the time, Nick, because this is your company, this is your future. So what are your thoughts on those developments? I'm sure you've been paying attention to them. Does it worry you? Does it scare you?
Yeah. So let's, it would certainly be scary for that to happen. Not only that, because, Luxor is my company, and I definitely like, I like the ethos of Bitcoin. And if they forced my company to, do something that's against the ethos of Luxor, I'd then be, or against the ethos of Bitcoin, I'd be like a man divided, because I love Luxor and I love Bitcoin. What do I do? But that's more aside from my personal views on this. I do think it's, I think OFAC sanctioning addresses, or OFAC blocks, like they call it filtering, transaction filtering. I think it's very silly, because the next block is going to include those transactions anyway. Like, I don't understand. And then there was even some thought of like, oh, well, you can't build on a block as a US pool. You can't build on a block that includes OFAC sanctioned addresses. And then you effectively fork Bitcoin, which I think is a terrible thing as well. Talking to regulators, I do think they understand that. And I think that what Marathon did was they thought that the market was telling them that they should be doing this OFAC sanctioning preemptively, OFAC censoring preemptively. And then the market obviously turned around and told them that they should not. And so they changed their trajectory there. And I think that that's really where most of this OFAC censoring has come from. I'm not sure that we've seen that since then, or I've seen much demand for that since then. What OFAC censoring does, if anybody isn't aware, it basically keeps any address that is included on the OFAC sanction list. There's a big list. You can go look it up. There's a big list of all these addresses that are associated with like terrorist organizations, money laundering, dictators, that sort of thing. And if any transaction includes inputs or outputs from those addresses, the idea of OFAC censoring blocks is that you would not include those transactions in the mempool, and ultimately include them in the blocks that you end up mining. But again, it's silly because the very next block, mined by, F2 pool or Ant pool in China would mine it anyway. So somewhat a silly requirement. Now, onto your point about Stratum v2 potentially fixing this. Unfortunately, I don't think Stratum v2 will give mining pools some plausible deniability and allow them to point to their miner as saying they were the ones that proposed this block. But unfortunately, I don't think that Stratum v2 will fix this. And the reason is that even if the miner selects the transaction, the mining pool has to agree to the template that the miner selects. And ultimately, what would happen is if the regulator is not going to go to individual miners, the regulator is going to go to the pool and say you have to reject those transactions and reject those templates. So even if the miner is submitting a template that includes, say a violating transaction, the pool has to accept that, and the pool would just say, "Oh, unfortunately, we can't accept that," and they would just reject it as part of the protocol. That's built into the Stratum v2 protocol. The mining pool tells the miner, "Here's a set of transactions you should work on." The miner then responds and said, "Here's the set that I'm going to work on. It's missing, say these 5 transactions." The mining pool says, "I don't have those 5 transactions. Can you send them to me?" Once they've been sent to the pool then would need to open them up and decide if those are valid transactions to mine. Ultimately, then they would say, okay, we're actually going to only accept 3 of these, and so here's the block that you'll end up mining. The only thing that can fix this from a technical perspective is introducing either zero knowledge mining, meaning like a shielded mempool, something like that, which far outside the scope of what Bitcoin would be able to do now, or the mining would end up moving to places where this type of regulatory environment doesn't exist.
Yeah, and so do you see mining pools making that migration? Do you see them kind of going where they're treated best in this particular situation? Because so we kind of you do.
Sorry, I don't. I spoke with the regulator about this, and they said, "Is there a way to make what would make a mining pool non-competitive?" And I told him if you at any point require mining pools to censor transactions, then they're inherently less competitive than their counterparties, especially foreign counterparties, which won't be subject to the same regulations. So either they would need to be subsidized by the government some way to make up for that delta, or they would need to move elsewhere. And so that would be like you said, if it was a hard requirement and the government decided not to budge on that, they would need to move to places or figure out a way to, purely virtualize themselves into, a kind of like a DAO-like entity, an entity that has no owners.
Wow. So do you see Bitcoin mining pools making that? Do you see them? I'm just going to ask you, like, on an individual basis, like, are you willing to move to El Salvador?
No, I'm not, unfortunately. But a lot of companies are run. I mean, at SBF, Alameda was ran from San Francisco for a majority of its life. So these are definitely things that you could do. These are definitely things that you could do. You just move the entity to the Bahamas or Isle of Man or the British Virgin Islands, places that have favorable international crypto law.
Gotcha. Yeah, man, it's definitely going to be an uphill battle. I think Bitcoin is going to be the only one that's really going to resist any type of government capture because it's
Right.
it's true decentralization. I think even Ethereum, man, you're seeing Ethereum already. What is it? 70% of Ethereum validators are actively censoring for the Office of Foreign Asset Control. So it's like all the shit coins, man, they're not going to stand a chance. It's really Bitcoin to be the only one that's going to survive this onslaught. But I think the battle is definitely going to be rough. Do you think that this is going to be covert? Do you think that this pressure is going to be covert, or do you think it's going to be they're just going to tell everybody like, look, like if you don't censor,
I think it's really easy. It's really easy to tell. You would be producing. You would find either a pool or an entity producing what you would call non-optimal blocks, meaning they're blocks that leave high-value transactions behind. And for some reason, they're leaving those transactions behind due to some external incentive or some external force being applied to that. Whether that's a reason could be, are you familiar with Bitcoin transaction accelerators? This used to be a thing back in like 2015.
It was even around. You could even see them 2017. They used to still be around.
Yeah. So basically what a transaction accelerator is, you would go to a mining pool and say, would you mind including this transaction? It doesn't have enough fee. I'll pay you out of band some extra Bitcoin to include it. And really what it would produce, what would ultimately happen is the mining pool would appear to be mining non-optimal blocks, meaning there's a very low transaction fee transaction in the block when there's much higher transaction fee transactions in the mempool available. We would start to see that consistently across the board if there were censoring pools, meaning they would be producing non-optimal blocks when they could be increasing their fee reward by including those transactions. That could be that would be like a sign. And so I don't think it would be very covert. It could potentially be somewhat covert, because there are other reasons, like why, accelerators. Another reason why you would include a low fee transaction, because you've been paid out of band. But ultimately, RBF kind of made those go away, replaced by fee, made transaction accelerators not really a thing anymore. But there may be other reasons why you would have non-optimal ordering.
Gotcha. So let's talk a little bit more, because I think this is I've had Ben, Chief Mining Officer at Bitfarms, talk to Odell at length about this. Right? It's basically I think it's inevitable, Nick, in my perspective. I think it's the inevitability of the attempt at the censorship of Bitcoin, right? And I do think that what we've been talking about, the capture or the pressure on mining pools, I definitely think is going to be a weak point. What do you think are other weak points? What do you think are other things that keep you up at night? And most importantly, can we win this? Because the reality is that government, specifically the United States government, gets a tremendous amount of power from being able to control money and the money flows, right? And the Office of Foreign Asset Control is an incredibly powerful tool, right?
Right.
I don't think they're just willing to give that over gently, So what are some weaknesses? What are some things that keep you up at night?
So having a lot of hash rate in one country is certainly one that would be concerning. And I think we're getting, I don't know if we're there yet, but we should at least keep a close eye on the amount of hash rate that's in specifically America, because there is, this seems to be the best place to mine right now. It's where everybody's moving. I would prefer, how many countries are there? 200. There's probably 250-ish countries in the world. Maybe each one of them has one exahash. That would be like the ideal arrangement and each one has their own mining pool. That'd be the ideal arrangement for Bitcoin, the Bitcoin network. Every country has one exahash, and it's all perfectly distributed across borders and things like that. And that's not the case right now. So that is, that would be one somewhat of a concern. If I were really concerned about regulatory capture of Bitcoin, I would say on ramps and off ramps are probably the biggest place where they'd be exerting pressure. And I think they do exert quite a lot of pressure there now already. The rigmarole that pretty much any exchange has to go through to operate in the U.S. is extremely high, and maybe that's not, it's certainly, with FTX going under, maybe it's not as bad as it seems, but I certainly think that's where, if I were a government entity, that's where I would be exerting pressures on ramps and off ramps, specifically fiat on ramps, off ramps.
So, and then do you think, and what is the, and again, the inevitable conclusion that I've come to is that they're going to try to demonize and stop people from taking self-custody of this thing. I think that's where it's going in terms of the on and off ramps. But from someone in your shoes, where do you see this going?
Yeah, well, self-custody is so easy. It's so easy to take Bitcoin onto my MacBook or my iPhone or a Raspberry Pi or even a QR code. I think that those are, I think it's so easy to take self-custody of your Bitcoin that I just can't see that, like, the self-custody being a place where the government would insert themselves. I think once somebody has decided to self-custody their Bitcoin, it's already, at that point, it's outside of government control. Now, how did they get that Bitcoin? That's the question. So they had to have either mined it, went somewhere and bought it with fiat, or done some service to get somebody to pay you. So say I mow your lawn and you pay me a million sats. Now in that case, there's really no way for the government, in my mind, to insert themselves into that transaction. Now, if I had to go, but maybe, who knows how you got those million sats? Maybe you had to mine them. That's a way the government could insert themselves, or maybe you had to go buy them from Coinbase or from Swan. That would be a place where I think the government could insert themselves and exert pressure on folks trying to utilize Bitcoin.
All the on and off ramps are just going to be something that's easy to apply pressure. I think the mining pools, I think the actual physical miners themselves, what do you think about this vast majority of concentration of Bitcoin mine? And then this kind of, I've been making this full circle for a while now, which is eventually really what needs to happen is there needs to be enough adoption to resist these types of political attacks, because a lot of the percentage of the population is just going to be acting in their own self-interest. They're not going to want to, it's like and I was talking to Opti about this for a while, right? It's kind of like the NRA, right? Like, a lot of people own guns.
Yeah.
And then every time they try to pass gun legislation, they're like, nope.
Yeah.
Right. So, and if there's not a sufficient amount of adoption, right, then that pushback is non-existent, right? It's just like, yeah, you know what, like sheep's the slaughter type of thing. And yeah, so that's,
I think we're getting close. A couple things. So I think one of the reasons that NRA is able to remain so powerful is because all they have to do is say no, right? It's not like they have to really push anything. All they have to do is say no. So we're also in the same boat where we can just say no. It makes it a lot easier to get your argument across when you're not really progressing things. You're trying to keep them from changing, which is what we would like to do. Because right now, custody of Bitcoin, all these things are very well established. And I do think that we're getting to a level of adoption where it would be very difficult, I think, for the governments to, let's just say self-custody is illegal for whatever reason. It'd be very difficult for the governments to do that because they're going to make millions of people, potentially, that are potentially breaking the law. There are probably millions of people. I would bet there are more than several million people in the U.S. that have self-custody of their own Bitcoin. Coinbase has, I don't know how many hundreds, they have 100 million customers. Like the odds of 5% of them taking their coin off of there, pretty high. So I do think that we've gotten to a point where I do think, in fact, that it's clearly we're clearly far enough along that they have to make some consideration for citizens that are already doing this.
Yeah, but what makes you say that? If in the 30s, right? You know, you had FDR's infamous 6102, and he just made it illegal for citizens to own gold. What
Yep.
makes you think that if the U.S. government was in a dire situation where such a large amount of people were just opting out into a system of which they can't control and efficiently tax, I might add, right? What I wouldn't put it past them to do something reflexive, and then it all boils down to there needs to be a sufficient political move. I hate using that, but there needs to be a sufficient like political type of movement, really, because that's what it
Are
is.
there
Yeah.
are there political movements that you're aware of now that you found popular? Like pretty big fan of the Texas Blockchain Council. They're really advocating well for miners. Doing the right things there. Are there any, like, at least American political activists that you think are making moves?
I think that unfortunately a lot of the topics that we're talking about, like for example, I've been doing my rounds on legacy media, and the
Hmm.
kind of it's the same question every time. FTX, crypto is done, and you're like, no, not crypto, Bitcoin. And they're like, what is that?
Right.
I'm like, look, if you took self custody, this FTX blow up would not have affected you, like, period.
Right.
Right. And they're so blind to that. Like it's such an alien concept. But what makes me very bullish is that you have Tucker Carlson, had Nayib Bukele, had Michael Saylor, had
Hmm.
Max Kaiser. So the concepts and the ethos of what is happening in Bitcoin is starting to seep into mainstream consciousness. But I still think we're like 5-10 years out. I don't believe we're
Okay.
close. And I think that unless those ideas and those principles of government money steals from me via inflation, those aren't mainstream consciousness. I talk to my normie friends and they're still asleep. They think nothing's wrong, right? But I think it's a huge problem that I think causes a lot of pain to regular people, and those regular
Yeah.
people keep seeking political solutions to it, whether it's voting Democrat, whether it's voting Republican, specifically in the US. But it's not a political solution in that sense. It's really about change the money, fix the world, but you got to change the money first.
This is the first time in my life that I've ever talked about inflation, like in a pretty consistent way, like this, maybe last couple of years. I was certainly, in the early 2020. I mean, rates, like, even 2019, before COVID, I was like 2019. I was like, rates are so low. Inflation is going to run here. It has to. Like, we've been in a zero, like effectively zero interest environment for years. Like, what is going on? And then, the administration at that time really guided its policy based on the S&P 500. If the S&P was going up, things were going well. If it was going down, things were going poorly. So just keep cutting rates. And I mean, I believe we were at probably less than 1% when COVID hit. And so they were able to rate cut a couple of times. And, like, I was like, that's it. We were at 0%, and, everybody's locked down. This is like the perfect catalyst for a massive inflationary situation to occur once the money starts moving again. The velocity of money effectively went to zero in 2020 because everybody was holding on to their pearls, no idea what's going to happen with this pandemic. Countries all over the world are locking down their citizens. Nobody's spending money on anything other than food and gas. Maybe not even gas, because nobody's traveling. Airlines were shut down. Everything. It was like, what are we going to do here? And then, fast forward to 2022, lockdowns are over. Energy crunch, inflation. That's like That's like everything you could look for in an inflationary environment, and we're certainly there. The rates did not raise fast enough. We're still probably pretty far away from where we need to be on rates. So now the reason I'm saying all this is because this is the first time that I've ever really thought about inflation. Unfortunately, Bitcoin did not hold up against the hedge against inflation, but it does still hold true that it is sovereign money, and it's money that doesn't require a government to issue. And I think that's the most powerful concept for Bitcoin.
Yeah, and it was I forget, because I did ask this question to Dr. Ross when we were on a panel on Pacific Bitcoin. I said, "Hey, did Bitcoin fail as an inflation hedge?" And he told me that we were defining inflation hedge wrong, something along those lines. I wish I could completely remember, but his explanation made a lot of sense. There's like different types of, I think there's like price inflation versus asset inflation.
Right.
And Bitcoin did hold up on one, and the other, it kind of didn't, right? But I mean, right now, the reality is that Bitcoin's being treated like a risk on asset, and it's going down with the ship in terms of, the S&P and the NASDAQ. I'm really curious if we're going to finally see a decoupling, is it going to finally decouple? I don't think so. I don't think anytime soon. I think that it still needs more, like, people need to believe in it more. People need to understand what it is more. And I think that they're really seeing Bitcoin as they're seeing it as a speculative play.
Right. I think actually somebody in the chat made a really good point. It's more of a long-term inflation hedge, and I would certainly agree with that. Bitcoin, I love whoever said this first. I don't know who it was, but Bitcoin is not a get-rich-quick scheme. It's a keep-from-getting-poor slow scheme. I think that was maybe Jameson Lopp, and I think that that's actually the most valuable point for Bitcoin as an inflation hedge. Inflation, we have times of high inflation and low inflation, but inflation is always there. Even during times of low inflation, it's still there. Even when we were at historically low inflation in like 2018 and 19, maybe that. Don't quote me on that. I'm not sure if that's exactly true. I know inflation was low, but I'm not sure if it was historically low. But even during those times, doesn't matter. Inflation still is there. It's never deflating, right? It's always inflating. And so during that time, it doesn't feel like things are getting more expensive per se from a price inflation perspective, but your money is still being eroded slowly and every day. 2% of your money, or every year 2% of your money effectively loses its value. And that's what's happening, and over the long term, Bitcoin is the hedge against that. And I certainly do believe that.
Yeah. And that concept, right, you're talking about is something that Bitcoiners are fundamentally, shitcoiners are just completely pie in the sky. They have no idea what the fuck is going on. But Bitcoiners are finally attuned to the scam, the theft that is inflation, right?
Right.
That idea, those ideas, those principles, in order for Big Daddy State not to come tomorrow and just hit us over the head with the stick, that needs to seep into mainstream consciousness. And in my opinion, I think we're very far away from that.
Okay. I would tend to agree. That's certainly, I would say we're certainly maybe, if not 5 years, maybe even longer than that away.
Yeah. How does that change? And I've asked this question to everybody. How does that change?
Okay.
Like, from the media front, it's just a matter of education. We're all putting our hopes and dreams in this, right? Whether it's our businesses, whether it's our careers, right? So from your perspective, a mining pool operator, how do we change this? And the running joke that I always tell Opti is, if we don't fight and win here, we're all gonna have to move to El Salvador.
What changes it? Continuing ubiquity. I think point of sales. I know somebody was chatting about point of sales in the sidebar here, but I do think that if we can use Lightning as payment rails, and it doesn't need to be. I actually don't think that end user adoption of Bitcoin is actually going to drive like the next big wave. I think it's going to be remittance. Basically, there's actually this startup is still stealth, so I can't talk about this one yet. I was about to give away some alpha, but
go back.
Imagine, I'm like rewinding here, trying to make a different point. So imagine like a proof of sale takes a credit card payment But that credit card payment in the end could ultimately result in a Lightning exchange occurring. If we could get like a stable coin on Lightning, that would cause a ton of, I think, a bunch of liquidity to flow into Bitcoin and also a bunch of adoption. Whether we like it or not, stable coins are really, really popular in other countries because they want to be able to pass along the value of US dollars without actually having to use US dollars.
Yes.
They're used a lot in other countries. We pay a lot of our salaries in stable coins. And ultimately, those are all built on ETH. But if there was one on Bitcoin, that would be an incredibly powerful tool. And I think that would drive a lot of adoption as well. Continuing to add payment.
But hold on, they provide a false sense of financial sovereignty, right? Because we have heard, like, for example, Luna, right? I have a dollar in my stable shitcoin, whatever, stable, whatever coin. I'm great, I'm fine. The volatility, but we all know that there's a central party that can fuck that up, right?
Right.
And as was the case with Luna. So I agree, during the transition, stable coins are going to be extremely popular.
Yeah.
But I think that in 10, 15, 20 years, it's going to be Bitcoin. Like, people are not going to want I don't think they want that exposure to dollars anymore. Maybe that's my naive of me saying, but I just think I think in Bitcoin's incentives are always going to win the day.
I agree. I certainly agree. But if we're able to build payment rails that are USD backed on the value of the Bitcoin blockchain, like, that's insane. Like, that's an incredibly powerful concept. And it allows for a more seamless transition. If I'm already interacting with Lightning and I'm using it to trade USD for coffee or something else, it's a much smaller step to go from that to paying in sats. Using my Bitcoin balance for various things throughout the world, because the change there is really just the denominator, which is the currency, and it makes it a lot less. It takes a lot less friction. Getting the payment rails set up, I think, is going to take a lot of work. It may become an insurmountable effort if that also results in, like, merchants and all these people that know nothing about Bitcoin having to use Bitcoin. But if they were able to use this, like, incredibly powerful, immutable US dollar backed exchange rail for a while until Bitcoin had more ubiquity, powered by the Bitcoin network, I think that's an incredibly compelling story and could reach that next order of magnitude of adoption.
Yeah. I agree, man. I agree. What a crazy time. Have you heard of the fourth turning theory, Nick?
I have not. Maybe I have in some other concept.
So it's this concept where hard times create strong men create good times create weak men, and then kind of like the cycle repeats itself. Well, based on that theory, we are either in the hard times are creating strong men, or good times have created weak men are creating bad times, right? So, like, we're kind of like in this stuck in between. And just, like, take a look at real estate, man. It's doubled really in the last 2 years, and it's created this situation where, dude, if you're below a certain age, unless you are in the 1% of that age group, you can't own anything. And it's like all of this is normalized, and it's just creating all this chaos. So I don't know if you're, because dude, I understand. I don't know if, based on your responsibilities, you're just so closed off to, this stuff, but I don't know. What are your thoughts?
I mean, I 100% agree. I do firmly believe in the, I hadn't heard it called that, but good times create weak men create hard times create strong men create good times. And we're certainly in that case where and I think free money, like low interest rates, probably produce weak men, because you're producing weak businesses that don't have to produce as much value to remain I guess solvent in that sort of economy. And so that sort of thing, the monetary policy there is certainly, would tend to, I would tend to agree with you, due to this certain monetary policy. The ladder pulling that we're seeing from our parents' generation is certainly not is certainly not encouraging. They're pulling up a lot of opportunities that they've had, pretty freely accessible to them when they were kids. And so I do feel bad for the I do feel bad for millennials and Gen Z just in that regard. Like, they may have been branded as sort of like the whiny generation, but they also have been like
shafted, man.
royally screwed.
Yeah.
Sitting in, I guess I am a little bit of I'm an older millennial, so I'm 33, and I would be, I was sitting in what have been 6th grade when, the first plane hit the tower in 2001. What is it? 7 years later, the housing crisis, the Great Recession occurred, COVID, like what a stretch we've had here as millennials, and Gen Z kind of started coming into adulthood in the early 2010s there. So
is Bitcoin our savior? Is it coming here, and is it our chance to right things?
It's certainly a great way to opt out, and I do think that
What do you define that? What do you mean by opt out?
Opt out of the broader economic system. And I certainly think that is attractive to a lot of folks that feel like the system doesn't really work. It works for a subset of people and doesn't really work for them anymore. Aside from first world folks, I think that Bitcoin's biggest utility now is going to be in third world areas.
Yes.
It's on a per capita basis. We always really are US centric. A lot of the things we talk about are like what's going to happen to US miners, what's going to happen to US people that have issues with on ramps and off ramps. Well, but per capita, the most the highest adoption rates are coming out of Africa, and so I think that we'll continue to see that because it's a way for folks that have no banking system, no way to get a banking system, to seamlessly opt in to a network that they don't, it's operating outside of them. They don't have to really do anything. All they have to do is get an app on their phone, and off they go. They're now banked. They can get monetary value. They can seamlessly exchange it with others. I think that is going to revolutionize the way business is done in a lot of places where traditionally banks have not even been involved. And so it's I think that's a huge portion of the adoption that we're going to see in Bitcoin. Outside of, the couple hundred, 350, 400 million people that live in the US, there are several billion people that live in places that don't have access to a bank and are now going to immediately be banked just by owning a phone.
Yeah. And I think that fundamentally changes everything. And it also really challenges the existing power structure, right? And again, all this is connected, guys. This is all interconnected, which is the big incentive for, these government agencies, whether it's the US Treasury, to really use their monopoly on violence to threaten or apply pressure on, you believe it's the on and off ramps, right? The Bitcoin miners, Bitcoin mining pools. And I really believe this is the fight of our time. And which is why I think it's important to talk about these certain things. And also, most importantly, it's really to grow awareness and and get these ideas out into not just hardcore Bitcoiners that, are making content or, running a mining pool, but really into the average Joe, and then the case is, why should the average Joe care? And that's where it's interesting, because I completely fundamentally agree with you. In developing countries where they have two-digit inflation, it's like, it's not even an argument. It's like, hey, non-government currency that can't be debased. And they're like, where do I sign up? Versus here, it's like, that isn't energy efficient. It's hard. It's difficult because everyone's distracted by the breads and circuses.
So I think I just did a quick Google search. The average income around the world of all 7 billion is around $10,000. That's the average income.
That's crazy.
I'm certain that you make more than that. Pretty much everybody listening to this makes more than that. That's the average. That means that 50% of the people in the world make less than $10,000 a year. That's an incredibly sobering statistic, because when we talk, almost exclusively, we're talking about folks that are, several sigmas away from that average. And so I think that, we're for less than, a couple of dollars, you're able to opt in, open a Lightning channel and opt in to this global financial ecosystem and be able to participate easily and seamlessly without ever having to trust in another government's currency ever again. The U.S. government, when it inflates its currency, most other currencies are pegged to the USD, so most other currencies inflate even more. A lot of countries, or at least the countries that I'm aware of in South America, have a saying that if the U.S. has a cold, we have the flu, or we're like on our deathbed, basically stating that if the U.S. dollar has a little bit of inflation, they're going to have a lot of inflation because of the way that their economies are structured. And so if you could opt out and opt into an ecosystem or a financial system that doesn't rely on that dollar, and you're now somewhat not beholden to your own currency as well, it's incredibly, incredibly powerful.
100%. It's inspirational too. So Nick, what advice would you give to Bitcoin miners, specifically the ones that are just starting out? I get messages from people, and my message to them is based on what I went through, my whole experience, 2017, 2018, which is like the beginning of my 2016, 2017, 2018. It was like the beginning of my mining journey, right?
Yep.
My advice is the same: survive until the next bull market, and if you manage to do that, you will be very, very, very happy you held on, right?
Yeah. So getting a bit more specific on what does it mean to survive. So I guess you would have to break down, if you're getting into mining now, you would need to break down like what is your budget, what is your scale going to be? That machine right there probably now is maybe $2,000. This time
S19.
last year was going for that's an S19 Pro, not a J Pro. So around this time last year, that machine was going for about $12,000. So you have to ask yourself, like, how many of them am I going to buy? And then you can kind of break yourself into buckets where, if you're buying 1 to 5, you could probably do that at home with maybe a little bit of a little bit of modification. That one requires 220 volt, so I have to plug it in with what I call my Franken cord. I went and bought a dryer plug cord and then wired it so that it works. And so I plug it into the dryer plug and then it runs off the dryer. Now, if you wanted to get more sophisticated and have, say 5 of those running, you'd probably have to have somebody come in and install, enough plugs for you to actually operate that. That thing uses 3,000 watts. So if you had 5 of them, that'd be 15,000 watts. So that's a pretty large amount of, you're using 15 kilowatt hours per hour. You'd be using about 360 kilowatts a day. Average rate is you're probably paying 30 to 40 bucks a day in electricity costs at that price. And then, over the course of your month, your power bill is going to be $1,000. Now, that said, an S19J Pro, probably marginally profitable at your residential rate, maybe, but you'll never pay it back. So really what you're doing is you're investing in the infrastructure that produces the Bitcoin and hoping that you're able to ROI the machine at a later date, because you won't be able to ROI it at home. Then you get into this other tranche of miners, which is like, if you start getting more than 10, you're not going to be able to host them at home anymore unless you have like a purpose-built facility, like you have like an off building or something like that. Because now you're looking at like 30,000 kilowatts. You're starting to get into like a pretty upper echelon of miners here. You have to start looking for a host. So in that case, Luxor could help you find a host, or there are a lot of hosting options available. What you should probably do is try to find a host that's close to you. I would say I would optimize for locality over price, because if anything goes wrong, you can at least physically get there and maybe get your machines. Your ability to go to a facility and say, the owner's there and he's like, oh yeah, we're bankrupt now, and you're just like, you maybe get your machines back. And then if you start going to 100 plus, like at that point you have to start looking for more specialized facilities. Your hosting options are reduced pretty significantly when you start going that size, because you're gonna have to start buying like whole containers, and then those containers have to be placed somewhere, and then you're starting getting at CapEx and that sort of thing. So at that point, definitely want to reach out to somebody at the Luxor team. We can help you get in contact with the right people, help you make the connections with the hosts that you need, that sort of thing. So that would be, just high level, the few different tranches of miners, where they fit in and how you can get involved. Again, all this stuff you can go and see, get more information at luxor.tech or hashrateindex.com. We run those properties both in tandem, trying to offer mining insight to customers, both on a retail basis and also for our institutional clients as well.
So it feels like these machines are getting more energy intensive. It's not feels like they are getting more energy
100%.
intensive. The efficiency, the improvements versus the last generation machines compared to the very beginning. Holy crap.
Oh yeah.
The jumps aren't there. So it looks like they're just trying to pack in more punch. In my belief, that's really what I think they're doing. Is it ever going to get to a point where it's not even feasible to run it at home anymore? Really, the only miners left are large industrial miners, or, potentially, I don't think mid-sized miners are ever going to go anywhere, just because of how awesome it is to find a good site, right? Then that site doesn't have, it could potentially not have, it doesn't have the potential to increase, right? But it just makes sense. So I think medium-sized miners are always going to exist, but the smaller guys, right? Do you believe that's what we're getting? That's where we're going to?
So the newest S19, the S19 XP Hydro, the one that came, that one that they were announced at WDMS in Cancun, maybe what was it, 2 weeks ago, uses 5,300 watts. Like, that is an incredible amount of power. You have to have very specific, you'd have to have a very specific circuit run. I don't even know, 220, 5,300 divided by 220. Yeah, you need at least a 30 amp 220 volt circuit. I don't even know if that's quite right. You might need even more than that, maybe 40 amps. That's a very significant circuit to have to run. And so anyway, what that means is it's going to get harder and harder to run these machines at home. There will always be a niche of miners that are going to run at home. Like the J Pros, the S19 J Pros. I think that's going to be like the next S9. So I would say that most likely, like, that would be the model that you'd be targeting if you're going to be doing home mining for the next bit here. But I do think that over time we're going to start to see that these machines do get more and more industrialized and start to look a lot more like servers that go in a data center than machines, shoe boxes like that that sit inside of somebody's home.
Nick, I had a great time, dude. Thank you so much for joining us. Last question for everybody. For anybody who's getting into Bitcoin and they don't know, why Bitcoin, not crypto?
It's the only asset that's been able to hold up to attack both inside and outside for up to, about 12 years now. I would highly, I suspect that will remain the same. It's money, but better, man. It's the best.
Oh yeah. Nick, why don't you tell everybody where they can find you online and what you're obviously working on Luxor these days. So why don't you tell everybody where they can find more information about Luxor?
If you want to ping me about anything that we talked about, you can find me on Telegram or Twitter at @hash_bender. Or you can send us an email. We can check out the website, luxor.tech, or go check out hashrateindex.com for any mining insight that you might need. If you do want to get into mining, somebody there will be able to help you. If not me, happy to discuss it as well. So yeah, and then of course, Nico, really appreciate having me on. It was great seeing you in LA. Wonderful girlfriend as well. Glad that everything is. It was really good to see you, and hope everything's going well for you here.
Thanks, Nick. I really appreciate it. Great to have you, and love to have you back love to have you back on the regular show in a couple months or so. And
yeah, we can go on the regular show as well.
Absolutely. Well, Nick, I'm going to put you backstage for a little bit, wrap up. There's a slight delay, so bear with me. Guys, thank you for joining us. Another episode of Simply Bitcoin IRL, powered by Swan Bitcoin. We'll be back tomorrow at 12:15 p.m. Eastern Standard Time for another regular episode of Simply Bitcoin Live. Love you all, and I will catch you on the next one. Peace out.